Hi friends, welcome to SARAL Trader. We are going to do the review of the futures chart. So the first chart that we are looking at is crude oil. So let's start with the daily charts. So crude had a major fall. This fall came because of the Trump tariff things, and we had a major fall right at 71, 72 level, and we had vertical fall which stopped at around 56. So from 72 to 56 it was 12 and almost 14 16 points fall, which was around 20-22% fall, which is massive. Now that's exactly where the hedging comes in. So if you had hedged yourself this entire fall, the not only the hedges saved you but actually made you survive. And if you get rolled over, rollover, of course, when you have to rollover means typically buying a new hedge and booking the profits in the old hedge. So you would have come out in profit or at least at break even. Now let's look at the hourly charts. So we already had taken a swing trade earlier which we booked. Now if you see this 100 period moving average, this is the hourly chart, was acting as a resistance, and that's exactly where the rally fizzled out last time. Now on the we have been sideways for 3 days, one, two, and third day, completely sideways move. But now we are doing is we are trading. The crude is trading above the 100 period moving average, and now the new targets for this first target will be 64.30. That's exactly where it fizzled out last time, and this 21-day moving average also stands here. So this is going to be the first target. I am already long, and if we get anywhere between this range now, 63.18 to 62 will be acting as very strong support. So anywhere, if you are not adding, if you want to add your position, you can add now or you can add in this range if you get that price. My expectation is that in next week we should get 64.30. That is the first target, and if this target succeeds, then we may also see 65. On daily charts, we have a swing alert. This is a strong signal. Generally plays out in 2-3 days. I mean, at least in a week or two. You get the idea. So it's a bullish setup for crude oil. Now let's see the favorite index, RTY. Now RTY is the small cap index. Now a small cap index made a previous high of 2477. Now this was, if you look at the long term charts, 5-year chart. If you look at the 5-year chart, this was the double top which was formed in the bull market, post COVID bull market. So while all the new indices, other indices have made all time highs and broke above their previous COVID highs, crude oil made a double top and actually went into a major correction. From 2500, 2450 onwards, you went down to 1750, almost 450 and 250, 600 point fall, which is a 25% correction, which is basically a bear market correction. Most of the bear markets have these corrections. So this bear market, which small caps went in, seems to be getting over, at least for the short term. If you look at the hourly charts again, on the daily charts, just let me finish the daily charts first. So on the daily charts, if you see, we have a swing alert now, and the price is also trading above 21-day moving average. It tried trading first day, there was a major sell-off. There was a lot of supply here, this supply and these gap downs. So then next day we got a very clear trend right from the 100 period moving average and 21-day, and then third day also we sustained. There is a gap from 1920 to 1920 point gap which needs to be filled, but sometimes these gaps will not fill. Maybe we will go up, make a new high, and then it comes down. So 2050 is the long term target. Now let's see on the hourly charts. So hourly charts, if you remember last week when we were discussing, last week we had given a bullish call, and we were trading above 100 period moving average on hourly chart. So the idea was that we will go up, but markets will give you surprises. We actually gapped down. And when we gapped down, we went further down. The whole day the market traded. In fact, I was trying to do some intraday. I got trapped in that, but I was able to manage it. And then we got almost to the previous support level. This is the support I told you will hold. It held on to this support zone. I was expecting that we will further go down, but it didn't, and and then we got a very clear trend. And now we are above 200 day, 200 period moving average on the hourly charts. Very bullish sign. And again, I'm bullish on this long term and short term. If there is a correction now, this range, 1900 levels, will become a very strong support. So if we don't go up, come down in the range to 1900 or below that, you can add to your long positions for and with hedges. Keep at least 15 to 40 days, 45 days hedges with you. So this is a bullish setup. Let us see gold. So on the gold charts, there is a massive, monstrous kind of a bull move that the charts have taken. And after that, it went into a correction recently. So this is the signal we got at 33.23, and we have shorted it. And then there was this kind of a mean reversion move to the upside. And then now again, the whole day we traded, and again there is a kind of a move here. So bullish sentiment is very strong. First target for the short is 32.30, sorry, 32.40, and I think we should get that. I'm currently holding a short position in my personal account. Now the next trade index that we can look at is NQ. This is Nasdaq. Nasdaq, very strong bullish setup now. In fact, this was the swing signal that we got at 18,400, and from 18,400 to 19,600, it has massive move it has made. It's a bullish setup. If you look at the daily charts also, it's extended, so there can be some correction, but the momentum is very high, and there is a big gap here of 18,500 to 18,750. So either we'll have to wait and see, and we will have to have hedges. Anything, if you get the price between 19,200 to 18,500, this should be a position to add. I think the correction is over, and we might be heading into higher ranges. The first target for the longs is going to be 20,350 to 20,700. So this is what it is currently. Let's quickly see S&P 500. S&P 500, if you see, very similar to Nasdaq. Exact same swing signal, trading above 20 day, and also this is above the 20-day moving average. So this one, I think, very similar structure, and to all the indices will typically trade in a similar pattern, plus minus a few percentage points. So now again in the bullish setup, we will look for bullish signals here also. And if you get anything, any price, say for 53.50, 53.70 kind of levels, immediately you can add to long positions with hedges. The risk reward now to go long is pretty good. So that's why we share regular trade setups in all the major indices and commodities like gold, crude, wheat. On wheat charts, we have a very good strong setup holding on. Now this setup held, and we last time we got a move from 530 to almost 557, which was around 4.5% move. Similar support is now holding, and again we can expect the first target from 530 to 550 to 560 kind of targets can be expected in gold. Again, you should hedge. Hedges are easily available in wheat in the monthly contracts. If you're trading wheat or crude, always use monthly contracts to hedge your positions. We'll quickly look at BTC, Bitcoin. So Bitcoin last week, I told that we are in a bullish grip, and the targets of 92,000, 88,000 are possible. We got all the targets. Now we are in in a move here, and now it's in a very big bullish grip. In fact, I was reading a article that there has been a very strong momentum flow in the cash flows in the Bitcoin and the crypto markets, record cash flows. So now this zone below 87,000 to 88,000 should be very strong support zones. And anything if you get here, you can buy. I have already sold my position, so I'm not really watching it. This is also available in micro contracts. So this is MBT. So MBT is a micro Bitcoin contract. Currently, hedges are not very easily available in micro contracts. So it's better to trade this with ETFs like IBIT or BITO. Don't take any future position with hedges, because whenever there is a drawdown, even if you look at say 2 minute chart, let's see 2 minute chart, why hedging is important, especially in swing trading. So let us see the chart of RTY on 2 minutes, because see, charts are very charts will always move into fractals. Even if you look at any chart of any index, be it India's index, Pakistan index, whatever index, you will always see very similar pattern. Now, suppose somebody went long on this particular candle thinking that there is a breakout happening, and the breakout did happen. You went up on RTY 1950, 59. 1959, you sailed this through 1962, 63 kind of levels. Then suddenly, there is a sharp fall, right? The whole rally was triggered, and it took all these stops, because if you're going long here, people will keep you stop here, here, somewhere. All the stops were taken, and exactly when the stops are taken, they again a move came in. Now, if you are not hedged, and this can happen on daily charts, hourly charts also. Now, hourly charts, you see, if somebody went long thinking that now the uptrend is going, we are trading our key averages, immediately on the open, they broke your all the stops were taken. So without hedges, if you're trading futures, you are exposing yourself too much to the market forces. Don't do that. Hedge, and hedge is your edge. And also there is one very big advantage when you are trading, with hedges is number one, that you don't really you don't really that they cannot harm you beyond a point. Market makers cannot harm you beyond a point. If you're looking for regular alerts on futures, you can join my futures channel. The link is in the description, and you can also follow me on Twitter. Thank you.